To Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates and we're going to talk about low FICO score mortgages. Definitely a good topic. We haven't touched on this in a long time. What we'll do is we'll wait just a minute here to go live on all the different platforms. We do stream this live on YouTube, Facebook, LinkedIn, Instagram, Spotify, Apple Music. So definitely tune in wherever you can. We'll start here in just a second. Feel free to drop a comment there in the chat as you tune in. We appreciate it. Hope everybody's been having a great morning so far and ready to get into another great day. So it looks like we're live on all the different platforms. We'll go ahead and get started. What we'll do is we'll take the chat off the screen for now, but keep dropping comments there in the chat. And you can also drop any questions in the chat that you have as we go through here today. All right, so welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through some live mortgage rates, and then we do a deep dive into a different loan topic. Today's topic is going to be low FICO score loans. So there's a few different ways we can approach that. Jose is going to go through some different examples of that shortly. But before we do that, we'll do what we do every morning, which is go through the live rates for today. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the market is looking like this morning.
All right, let me switch my screen and we'll check it out. So the news this morning was not so great. Let me go ahead and pull up the pricer and we'll see if it has affected the rates yet. This is our pricing tool for our team of mortgage professionals. This will show us the rates for today, January 11th, just after 11 a.m. Eastern. With the live rates and the APR. If you'd like a full breakdown of all the fees that go into the APR, an itemized list, a full loan estimate, please get with our team members. We have over 200 licensed loan officers in 23 states. So for the demo here, we'll set up a basic scenario so we can compare across the loan types. We'll set a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. And have the computer search for the lowest rates we can offer for conforming conventional. Compare that with FHA, which is usually the next option that we look at. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional options beyond the standard here. We also have VA and USDA. I'm sure Jose will probably have some examples here later, but we don't do that live here. VA is only for eligible vets and active service members. If you are, just let us know. We can quote it, no problem. And USDA is only for eligible properties. If you do happen to be looking in one of those rural areas, just let us know. We'll start with conforming conventional, do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio here of 40%. So with these settings, let's check the rates this morning. And again, not much change since yesterday, so the news hasn't really trickled down yet. 6.125 rate, 2.25 discount points and cost. Puts the final APR at 6.391, pretty much the same as it was before. Now, these are great options as the rates were much higher just a month or two ago. So great options for all of our customers out there looking. And if our customer for any reason doesn't qualify for a conventional program here, the next option we want to compare is typically an FHA option. So we'll set up the same exact scenario. And this time we'll select FHA. FHA allows a little more leniency on credit issues, as well as a much higher debt-to-income ratio, but we'll keep everything identical so we can compare apples to apples here across the program. All right, looks like this changed a slight bit from yesterday. 5.5 rate, 2.125 discount points and cost, puts the final APR at 6.404. So this FHA option updated just a touch above conventional in this option. The other day it was just a touch below. So great option for our customers that need to use FHA. It's almost identical in this scenario cost. And our customers that are looking at conventional, definitely recommend check out FHA as well. This APR does include the upfront and yearly mortgage insurance. So definitely a good option to check out if you qualify for both. Now, where we love to specialize here at the mortgage calculator is if our customer unfortunately doesn't qualify for the standard, conventional, or FHA. Most other banks or lenders will have to deny that customer, but that's where we love to present our 5,000 additional options here under expanded guidelines. So we'll set up the same exact scenario here, but now we have a new option pop up under non-QM where we can select a different income. So full doc is what we use for FHA and conventional. That's 2 years of tax returns, what most people are used to. So if our customer doesn't qualify using tax returns, we'll typically choose one of these other options. We have asset-related options, business bank statement options. The DSCR investor programs are just for investments. We'll show that in a minute. Personal bank statement 12-month is the one we use for the demo here. That's the most popular. We also have RSU, stated income, VOE, 1099, P&L, no income CDFI, all the different options here. Most popular is the 12-month bank statement program, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs and may not qualify at all, or just may need a little bit of extra income to get that home. We'll solve the problem. No tax returns involved at all, just their last 12 bank statements to determine a debt-to-income ratio using no tax returns at all, just the cash in the bank. And in this example, we use 40%. So with these settings, let's check out the non-QM bank statement options. All right, little change here, which is great. 7.125 rate for 2.5 discount points in cost. Puts the final APR at 7.549. So we saw the conventional and FHA stuff has risen. However, we have non-QM now with a new update where it has gone down a little bit. Usually only updates about once a week or so for these non-QM programs. So this update does push us down a little bit from where it was before and more comparable to conventional here. We're about 1 point away from conventional. So our customers that need to use these programs, they're very affordable and comparable. And if we scroll down here, there's tons of different options, hundreds of variations under each program. Some of these variations may allow different types of credit events, foreclosures, bankruptcies. Some of these may allow us to use different ways to calculate the income. So please get with our team. They'll find which of these hundreds of different variations work best for you. And now before we go over to Jose, we'll switch gears to investors. So last couple demos, we use investment property as the occupancy. So we love to work with investors, seasoned and first-time investors, all have great options. We'll set the same scenario, 400,000 loan amount, 80% loan to value, 20% down payment. And we'll ask the computer to find the lowest rates we can offer for conforming conventional. And then we'll check out our expanded guideline non-QM options. Remember, FHA, VA, USDA, all the government programs do not work for investments. So we'll start here with conforming conventional. Everything's going to stay exactly the same as all our demos. The only thing we've changed is the occupancy to investment. So let's check the rates here for investment properties. Best option at the top, 6.875 rate, 3.375 discount points in cost. That's a final APR at 7.277. I believe that's a touch lower than it was the last time we checked. Definitely a good option as the rates have come down. Before it was not very feasible. Now these are great options for our customers that want to use full documentation. However, I recommend everybody checks out a non-QM option as well. So for the final demo, we'll do the same scenario. Except this time we'll select the expanded guidelines, also known as non-QM. So this now pops up our income option. The most popular income type for an investment property under non-QM is our DSCR option. It's also our most popular loan by far because it doesn't require any income or employment or documentation on that from our borrower. Simply use the estimated rental income from the appraisal to determine a DSCR value. It stands for debt service coverage ratio. The estimated rents can cover the expenses of the mortgage, aka the property cash flows. That's a ratio of 1 or higher. We even have options for ratios under 1. For the demo, we always put the highest option, 1.5, so we can see all the programs pop up. And finally, a prepayment penalty must be selected for non-QM investments. 3 years is standard for these programs. We can select 0 prepay. That will limit the programs that show up and cost more. We could also try 5 years. That will again limit what shows up, but does save our customers some money that are holding property long term. 3 years is standard. That's what we use for the demo, so we can see the most common options pop up here. So let's check out the DSCR this morning. Wow, smoking. Absolutely smoking. So yeah, adjustment here downward as well, which is great because we only get update once or twice a week here. But it went down, which is excellent. 6.875 rate, 3.25 discount points of cost, puts up final APR at 7.37, beating conventional here again today. So DSCR beating conventional is absolutely amazing. I would say 100% of investors will obviously take this loan, even if it costs more. And in this case, it costs less. So definitely recommend all our investors out there. DSCR is absolutely smoking. And today it is smoking conventional. So check that out. And if we scroll down here, hundreds of variations. Some of these other DSCR programs at higher rates and costs may allow bankruptcies, foreclosures, other credit issues. Also may allow short-term rental income to be used for the income. Lots of different variations here. Now let me switch my screen again and we'll get into today's topic, which is something that we can't do live on the pricer, which is our specialty options for low credit score. So on the live pricer, obviously we always use standard high credit score options so we can see all the best options pop up. But obviously we have plenty of options for our customers who may not have the highest credit score and may need to work on that credit. So we love to advise all of our customers here at the Mortgage Calculator to improve their credit score. So we include simulations typically for any customer that applies for a loan to help improve that score and improve their pricing. But also we need to make sure we have options available for customers with any credit score. So Jose has some options pulled up here. Typically, it's the government programs that are going to have the lower credit score options for government insured mortgages. So those are typically the options that allow us to go under the standard credit scores that are typically out there. So Jose, if you're ready with some examples, let's check them out. And obviously, preface them with a little bit of caution because these are specialty options. That's why we can't do them live on the pricer. And these are going to have special qualifications and whatnot. So go ahead and take it over if you're ready, Jose.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So today's examples are at the lower end of the spectrum, right? There could be a lot of reasons why the credit is low. Now, the first thing that I want to state is that all of our credit pulls have a credit simulation function that is possible there. So one thing we definitely want to do when we're dealing with our lower FICO score borrowers is offer them solutions, right? So you're not just going to immediately grab the low rates and try to force them into a loan which may not be in their best interest without also providing alternative solutions for them, right? It's when you do have that credit simulation functionality built into the credit report, then it is a good idea to use it, right? They say use it or lose it. So that's definitely something that I want to put out there because you could send them that initial quotes, which I'm going to show them to you now, but then you can also provide them with solutions so that they can, try to better their scenario. And if you don't offer them the solution, somebody else may, in which case then you may lose that deal, right? So always offer the credit simulation to try to get the borrower on board and do whatever you can. So give me a second here. Let me go ahead and share my examples with you. One other thing I also wanted to state, especially with the agency options that we're offering today, is that obviously this is just pricing out through the system, right? The system is saying that, you qualify based on the matrix. However, all the agency loans, if it's automated underwriting, you need to get an approved eligible. If it's manual underwriting, then you're still going to have to submit to underwriting for the review and hope that you get the approval. So this just means that the possibility exists to close a loan with that credit score and then customer will accept the quote, and then we will set it up and we will submit to automated underwriting. Hope we get our approved eligible, and if not, then we will set the file up for a manual underwriting if manual underwriting is an option, which it is an option for our FHA loans. It's an option for our VA loans as well. So we're going to show some really low credit scores here. First option here is 620 score for a conventional primary purchase, right? 620 is the minimum credit score per the matrix that is available for conventional loans, Fannie Mae and Freddie Mac as the two GSEs, right? So in this case here, we're looking at 7.375 as our lowest cost option and 7% as our lowest rate option. And keep in mind, this is for a 95% financing, right? 95% LTV. Because I'm going to show you something really interesting here. So now we get a 97% LTV first time home buyer, which is the only way you can go 97% LTV is to be a first time home buyer on an agency loan. And you will note that the rate has better pricing than the 95% LTV. Rather odd, but that is what it is. Here we're looking at 7.375 at our lowest cost option at 1.125 points. And the 5% down option was half a point more expensive at 7.375. And at 7% was also a half a point. So it seems to be a half a point difference in the spread. And then on the first time home buyer, you had an additional buy down option at 6.625. So it's odd how that is, but the 97% LTV first time home buyer has better pricing than the 95%. And then I'll show you here the affordable 97% LTV option. By affordable, meaning it's either going to be a home possible or a home ready option. Those are Fannie and Freddie options. This does not require you to be a first-time home buyer in order to get the 97% LTV. What it does require you is to be within the income limits. Typically, it's going to be 80% of the area median income for HUD. And that's easily found by using the area median income locator that both Fannie and Freddie offer, right? You go in there, pop in the property address, and it lets you know the HUD median income for that area, lets you know the 80% figure, and it also lets you know if the property is located in a low to moderate income or a minority census tract. That is very important information because if it is in either of those two types of census tracts, then the area median income restriction is lifted because they really want additional investment in those areas. Hence, no maximum income for those areas when doing the affordable loans, which is great news, especially like in South Florida, where, for example, almost every area is a minority census tract, so you can get some really amazing opportunities. And you're looking at 6.625 is at par. And buy that down all the way to 5.375. And I'm going to compare that a minute here to our first-time home buyer option, and they're charging 2.25 for 6.625 versus par for 6.625, the same 97% LTV, using one of the affordable options. And the MI is also a little bit lower, right? They use 0.25, I believe, as the MI factor instead of 0.35, which is used for the regular 95%. So you get additional savings there. Now we have some FHA options. Now keep in mind the following. FHA does not have a minimum FICO score, right? Any FICO score, quote unquote, restrictions that you see when searching your pricing are overlays by those FHA conduits, right? That means that they have decided to restrict they're lending on FHA in whatever overlays that they are placing because it's usually for secondary purposes. Whoever they are selling their loans to is requiring a certain parameters. Maybe they're getting better pricing, and that's why they do it. So keep in mind, it's all a matter of assessing the risk, and then the risk is going to show up in the interest rate. Lower risk, lower rate; higher risk, higher rate. So here you're looking at our 96.5% LTV at a 580 credit score. By the way, that is the lowest credit score where you can still pursue for most of the all the options I've seen out there a 96.5% LTV. Below 580, LTV drops to 90%. And the idea here would be to get your approved eligible, obviously, at a 96.5. So you're looking at 6.75 as your lowest rate option, and you can buy that down all the way to 5.75%. So now I got another little treat for you here. You probably didn't even know this existed, but you know, at the Mortgage Calculator, we're all about solutions. So here we have 500 credit score at a maximum 90% LTV. Now, again, you're going to submit this, see if you get your automated underwriting approval, and that would be at the maximum DTI. And if you don't get your automated approval, then you would structure the loan at a 90% LTV and submit it for manual underwriting if the borrower has not had any late payments in the last 12 months on their credit. Keep in mind also that manual underwrite maximum total DTI is 43% as opposed to 56.9%, which is the usual DTI when you're not doing AUS. So AUS really does open up the field. Now, very good rates here considering we're looking at a 500 score with 10% down. You're looking at 8.25% as your lowest cost option, and you can buy that down to 6.875%. Those are pretty amazing rates. Now we have VA low credit score. We can also go down to a 500 credit score, but the great news here is on top of the 500 credit score that we can also do 100% LTV. So we can still do 100%. Still no mortgage insurance on the VA loans. And if your borrower has at least a 10% service-related disability, 10% or greater service-related disability, which is that information will be found on their certificate of eligibility, by the way. If they do have that 10% or greater service-related disability, they will not have to pay the funding fee. They will be exempt from the VA funding fee, which is a little bit over 2%. So quite a savings there because that additional amount would be financed. So here we are, 8.25%, 1.949 is our lowest cost option, and you can buy that down to 7.35. So that's a pretty good rate sheet there, considering it's only about a 0.75 of a point difference between 8.25% and 7.375%. So they really want our loans, right? Amazing option here. But there's more. USDA, again, 500 credit score. Again, 100% LTV. But again, I also remind everybody these are all subject to either automated underwriting approval or this USDA. I believe we can do manual underwriting on this one as well. So you're looking at 8.25%. Again, these are pretty much the same rates that we got for the FHA. 8.25 as our lowest cost option and 6.875 as our lowest rate option. But wait, there's one final one that I'm going to blow you away with, right? Because you know how we love our DSCR loans. So here we have a DSCR purchase at a 575 credit score at a 65% LTV. Now, You can also do 65% LTV on a cash out refi on this same program. And they just add, I believe it's a quarter point to the rate for the cash out function. And I have priced this out at full comp here. That's the 2.75 you see there. So we're doing apples to apples here. So 10.625 rate is a 65% LTV for purchase or refi on a DSCR cash out is pretty amazing, right? So, and obviously we can do a bunch of scores above that at higher LTVs, but should you do have that borrower with such a low score, we can definitely help them out.
All right. Looks like we have a question here. More than often, I hit a wall at the 31 front end DTI on manual underwriting.
Yep, very good point. It's 3143. So we're not only looking at the back end total debt, but we're looking at the front end housing expense, and that is what's going to do it. That's why on an automated underwriting, I believe the system goes up to like 45.9% on the housing expense, and I think it's 56.9% on the total debt. So in the days before automated underwriting, that's how it was. Every single loan FHA was a manually underwritten loan subject to 3143 DTI limits for housing 31 and total debt 43. So you can definitely appreciate how automated underwriting has opened up the system. But certainly that housing expense is going to be an issue in some of the markets with higher taxes and higher insurance as well. But it is what it is. That's why we have AUS, and the manual underwriting is basically only for those loans that don't fit the AUS bucket. And that's what we have to deal with. It's higher risk, so they lower the DTI.
All right. I don't see any other questions, so I think we can wrap it up here. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back tomorrow with a new topic. We appreciate everybody tuning in. Thank you. And we will see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody. Have a great day.